it. Let's get into it. So this is how I trade. So this is how I trade. Yeah. Quick cap of how I trade. I trade liquidity. And what is liquidity? Let me write that down. I trade following liquidity. Liquidity is where money is, basically. Okay, let's not try to elongate the terms and whatever that is. Liquidity is where the money is. If the market is moving like this, it comes down and does like this, 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 does like this. We have two things. We have something here. Trend line liquidity at the top and liquidity at the bottom. And when we have liquidity like that, what the market will try to do, in essence, will be to clear out this header of this liquidity. So the market will do something like this. Come out, clean out this liquidity. Let me stop that there. What is that liquidity? People stop loss. Because it has already started creating a channel here, right? That started creating a channel here. And that channel that has started creating, a lot of people will start trading within that channel. As it hits the top of the channel, they sell. It hits the bottom, they buy. It hits the top, they sell. It hits the bottom, they buy. It hits the top, they sell. And then if they want to sell from here, the market goes and sweeps out all their stop loss that they must have put above that spot, waiting for the market to just hit this channel line and sell, right? So that's what the market would likely do. Hit everybody's stop loss and teach everybody a lesson. Hit everybody's stop loss, teach everybody a lesson, come back right into it and clear the lower stop loss right there, all the stop loss for people that want to buy from this second line, clear everything, come back into here and decide to sell fully now. It has taken people's buy, people's stop loss that want to sell, taking people's stop loss that want to buy, do like it really wants to buy, come into an order block that might be around here, and now finally sell. That's what the market will normally do. It works with liquidity. And most times, where the market is going to is actually going to clean out a bigger liquidity. So the market would have created, when it was clearing out these lows, it must have created another liquidity area of equal bottom, equal lows here. Of equal lows. Let me make it equal lows. So psychologically, you have an idea of what I'm saying. It creates another liquidity of equal lows here. Create liquidity of equal highs here. Create liquidity of equal lows below. Create liquidity of equal highs above. So now it cleared this liquidity to create liquidity of equal high, came down, clears liquidity to create a liquidity of equal lows, create another fresh liquidity now, and then comes back into this other block and then sells. Now, if I'm able to pick up the sell from here, you're able to pick up the sell from here and I catch that sell, my take profits will be anywhere below this liquidity, because I know for a fact that the market will definitely come and clear out this liquidity before it does any other thing. It might go up to heaven, it might go down to hell. As long as I'm in profits, my own target will be I'm clearing out this liquidity below. That is what we look out for when we're trying to take a trade. That is why when a trade goes against us, we are not so downcast, because we have checked through the trade. We have seen that everything we want to see is perfect, right? And then we want to now, by the time we are selling, or we are buying, we know we have seen what we want to see. The market needs to go and clear some liquidity now, right? We know that the market needs to go and clear some liquidity. So we are there waiting for the market to go. So if the market goes against us, we know that, oh, this is just manipulation. We catch you again, all right? So there are many other factors to this that I will be unveiling. We have a whole month. I can't unveil everything tonight. We have a whole month. There are many other factors, but this is one of the major psychology behind the way we trade. Liquidity. Liquidity, most of the liquidity that we talk about are the normal market patterns that most of you learned. Double top patterns, double top pattern, there's liquidity line above. It will come and clear that liquidity, come down, then before it now sell what it wants to sell. Clean out that liquidity there first. Double top liquidity, double top. Triple tops, those are liquidity patterns. Trend lines are liquidity patterns as well. Trend lines. So what we normally do is when we see the markets moving in our way, and it hits a particular area that we are looking at, we wait for further confirmations. Right now, you see me on the 3 minutes time frame. I opened my chart and you met me on the 3 minutes time frame. That 3 minute time frame is where I'm actually waiting for the market to give me confirmations, right? And if I was on my chart, I wasn't really on my chart today because yesterday was a good day, and I didn't want to overtrade myself today because I could just mess up all I did yesterday, right? So I really didn't stay on my chart. I only took the trade that Abiola FX shared. That was the only trade I took today, the one it shared. So I really didn't analyze it. As soon as he just dropped it, I just checked it on TradingView on my phone. And as soon as it hits, that was it for me. As soon as the trade does hit, that was it for me. I just closed up. I didn't even look at the charts again. All right. I didn't look at the charts again. When the market hits our zone, we just look for smaller time frames to get into the trade. So let's do the 1 hour time frame. Let's see what the bigger time frame is actually telling us first. The bigger time frame is obviously on a buy right now. It's obviously on a buy. The reason why I personally was looking for a sell, which I am still very much looking for right now. I will not look for a sell first until we clear these lows though. But the reason why I'm looking for a sell is we have liquidity line here. We have liquidity lying there, and we have imbalances lying here and areas of interest. I can see what gold is trying to do, clear a lot of people out. I shared this with the guys on Sunday nights or Monday nights. Yeah, Monday night, yesterday night, when we had our meeting yesterday. How the market was creating, we even like wanted to sell and then clearing, sell and clear it, sell and clear it, sell and clear it, sell, clear it, sell, clear it. So we need a sell that will break these lows now for us to know that the market has changed structure into a sell. So that brings us to our second point. Apart from liquidity, we also trade structures. So let me explain structure in a second. We also trade structures. Let me explain structures at the top here, at the top of my screen here. When the market is on an uptrend, it's creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. For example, we stop there. These higher lows are base. You know, we have rally base, rally base. So this is the rally to the top, the base, rally to the top, the base, rally to the top, base, rally base, rally. Those base, we calculate those base using the Fibonacci. I talked about Fibonacci in my beginner's course. I believe everyone that paid for this got my beginner's course and they've gone through it. If you have not gone through it, it's on you, because the beginner's course, I talked about Fibonacci there. And the major Fibonacci zone that I look at, although in the advanced course, I taught Fibonacci in a very different manner. If you are in the inner circle advanced course here, you will understand what I'm talking about in a totally different manner. We use Fibonacci to take profits from bigger time frames, target rejections and some other things. But for the regular knowledge, Fibonacci's are used to calculate this base, right? We are calculating pullbacks using Fibonacci, right? Now, this is an uptrend moving up, structure. Excuse me. The reason why we will keep looking for more buys in the market is because as the market kept going up, it was breaking structures like that. It kept breaking the structure above. So when it breaks the structure above, it needs to break the structure above before we can now decide that this is an uptrend, and we can now use Fibonacci to calculate the pullback and continue the uptrend. If it did not break this structure above, there will be no pullback to calculate with Fibonacci. It needs to have broken that structure for it to be able to calculate a pullback. I am teaching this like I'm teaching beginners because this is our first class. So if you are more professional than this, just give us some time. As we progress in the bootcamp, we will go very technical. For now, let us go talk like beginners to ourselves. You know, until we have a break of structure above, there is no Fibonacci retracement to calculate. That break of structure above is what makes us know that the trend still continues. Let's look at it here. This break of structure above here, hold on. All right, this break of structure above here shows that the trend still continues. We've broken above the highest high there, the higher highs. We created a new higher high, and the pullback is here. So we calculate with our fib. I think it's here. I think it's, let me use this one. Let me see. that place landed on our 75%. Perfectamente. Okay, let's go to the full Fibonacci there. Full Fibonacci. You can see how it came through 61.8 fib level between there, and it came between 61.8 fib level and, I want to make it clear, 61.8 fib and 78.6 fib level. Let me check the other week. No, the other week is not correct. This is the correct week, because I can see how it just stayed right there, just stayed right there. You can see that, and then the market pulled up again. This is where the zero is. Let me spread it out. This top here is 0. You can see it. And this low here, the swing low, is the 100 below there. Now, the market must have gone to take TP at, normally, as it pulled back to 61.8, for those that trade only fib levels, you put your entry at fib level 61.8. Your stop loss would be at 100 level, below 100, just a little below 100 level. And then your TP, which I always advise, would be at minus 27, right there. Easy, you would have caught this trade using Fibonacci level alone. Just Fibonacci.
Sorry,
I'm breaking.
I can't see your screen. I don't know if it's network. I was seeing it for a while, then it went off.
My screen is still sharing.
I can only hear you. But...
My screen is still sharing nicely. Hold on, let me try sharing again.
It's still sharing. It's still showing.
It's still showing. Okay.
Yeah. I will just play the recording.
Maybe our network.
Yeah, most likely it's our network. Okay. So please, you can just go and join again. You can come out and join again. So with ordinary fib levels, you can see that we would have been able to catch this trade easily, right? Why were we confident of the trade? Because we knew that it had broken structure above these highs and created a new higher high. So we know that the trend will continue. Now let us delete this and check what the new higher highs did. Now we had a pull down, a retracement, and the retracement caused another, let me move this guy, caused another break of structure above. You can see this break of structure here. You can see how it broke again, just like that, to the top and created a new top. Now let us calculate that fib from the new swing low. Now the new swing low is this fib level here, and we have a new swing high, which is this top. Now this top here, right? This very top right here. So this is our swing low, that's our swing high. Some people might argue and say our swing high is here. Anyone that suits you. Actually, you can say your swing high is because it's pushed from here to here, and then we had a pullback candle. Yes, this is the swing high here. This is swing high here. This very one here. It pulled from here up to this point, and then pushed up a bit, and then retraced onto this point. So on the smaller time frame, we would have seen all these retracements better. So this is our swing high right here. Swing high right there. Now, where did our swing high pull back into? The first time it pulled back into 50% right there, went up to minus 27 straight up, TP level, and then came back and pulled and rejected directly off our 61.8 zone, and then pushed right up to break structure above again. Yeah. To break structure above again here. Right there. broke on that structure, give us another pullback. So we have our swing low, our swing high, calculate it again, what's happened in the market. Okay, so basically that's what that's structure. That is basic structure for you, basic structure. Now, what is now that break of structure that we normally talk about? What is that break of structure? We've been calculating the fib levels going up, and then automatically we are now saying there's a break of structure somewhere, a break of structure somewhere. Let me explain that now. And then the market starts losing momentum. It gives us this, breaks above, then comes down like this. Boom. This right here is the break of structure. Why? Because the market has created higher highs, higher lows, higher highs, higher low, higher high, and it would have just created a fresh higher low. Instead, it broke above the previous higher lows to create a new low. Most of the time, in situations like this, the market creates something around here. It could be an order block, imbalance, FVG, whatever it is, and then it comes back into that area to pick the orders that are there and drop and start creating fresh lows. So we now have fresh lows like that, fresh lows, lower highs, lower lows, lower highs, lower lows, lower highs, like that. All right. Although it's not this smooth, we all know it's not this smooth, obviously, but this is the basic concept of what it is. It is actually. So most times, some people might not take the trade immediately from here because the bigger structure is this, and it just broke an internal structure below there. They might now wait for this bigger structure here to be taken out. So once this major structure is taken out, they will now wait for, most time, once the bigger structure, with what I've been noticing, for the inner circle guys, most of the when the bigger structure is broken, it doesn't pick an OB. When the bigger structure is broken, it doesn't pick an order block. It picks a breaker block. I have noticed that severally. I told you guys I've been back studying this breaker block thing. And by the time we are finally cooked on it, we are going to be milking the market from breaker blocks madly. So even though we are milking it already, I called yesterday's trade on gold out of a breaker block, actually. So we are milking it already. The first trade on gold yesterday. Okay. So guys, this is what structure is. This is where we now look at and we say, yes, there has been a break of structure. Okay. That's when we are now confident that there has been a break of structure. All right. So let's move into something else. I know you guys are taking notes. And as I said, we'll be having 2 meetings per week, and I'll be sharing insights. When I say I'll be sharing insights, that means when I take an analysis, when I analyze, I'll be analyzing a lot of pairs, because this is not just my inner circle guys doing this thing alone. My inner circle guys, I just analyze 1 or 2 pairs for them. But this time I'll be analyzing up to 5, 6 pairs so that everybody would, and I will explain a little bit into why I am seeing the market that way. With those my explanations, we'll be using it to build more questions, right? Build more questions and use it to set up more Zoom meetings for the bootcamp. That is why it's a bootcamp. We are here to learn. You ask questions. The truth is, if you don't ask questions, you'll be doing yourself. Although I might not be able to answer all because of privacy and privacy disclosure, but I would still try my best to give you what can be enough to set you up to win in the market, basically. We are just here to make money. That's all. There's no big talks anymore on that. All right. So that being said, I wanted to talk about something else. Give me a second, guys. Give me a second to check this concept here. I'll check this concept. So we'll talk about, okay. I think that's fine. That's fine for now. So let's go to another pair, because a lot of you detest gold. Let's go to another pair. Let's look at it from a bigger time frame, then we scale down to a lower time frame. So then the next class we will be having, please go to my pinned tweets. If you go to my pinned tweets, okay, Omotayo. If you go to my pinned tweets, you would see, go and like my pinned tweets. We are going to address what is on my pin tweets in the next meeting. And we're going to do it together, okay? I really don't want to open my pin tweet right now. But on my pin tweets, I spoke about, okay, there's no big deal. Let me open it. Now it's taking a lot of time to load. Okay, I didn't put it here. I did not put it here, but because I don't really trade this pair. Yeah, on my pin tweets, I talked about currency pairs key levels. This can help your trade massively, how to use it, blah, 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 blah. So we are going to look into how to set up this on our chart. It helps. Psychologically, it helps. All right, so we are going to look at how to set this up on our chart by the next time we have our meeting. This meeting will end in a couple of minutes. I said it's just going to be 30 minutes. So we have only about 5 minutes tops to go on this meeting, and then we end the meeting. I don't like exceeding time. I like keeping to time sometimes. I'm still an African man. Okay, so currently now we are on an uptrend here, and the market has been respecting the whole uptrend thing, and all that. I didn't really look into the chart to talk about liquidity though. The market has been respecting this uptrend thing. As you can see, I drew this line here. This week took out this liquidity. You can see trend line liquidity. This week, instead of picking up the trend line like this and just continuing the downtrend, it took it out and continued the downtrend. What does that tell you? That a lot of people's stop loss have been hit. And then it created another liquidity above there. And that is what this one came to do. Just went up and took out all that liquidity like that, and moved. Right? I think I took this trade. I can't remember. I took this trade. Very neat trade like that. Very neat trade. Very neat trade. Off the 200 EMA, we'll talk about indicators as well. There's a lot to talk about. Don't worry. We have enough time. So I'll be drawing up some charts, and whatever I'm explaining from those charts, you guys will be learning from it. Because my explanation will make you go back to your chart, use my explanation to check. Why did Olu of Trade say this? Why didn't he say this? Why did Olu of Trade pick this trade from here? That I like some people in the inner circle, they say that a lot. Why did Olu of Trade pick this trade from where he picked this trade? And they want to learn why I picked that trade from that spot. It's a very good learning behavior, a very good learning behavior. Why did he pick the trade from this place? Somebody would even disturb me. There's this guy always disturbing me. I always hold private meeting with that guy. He's one of my inner circle students. I always hold private because he always wants to know why I took a trade for a particular spot. Okay. So this is the bigger time frame. We're having buys. What am I seeing now? This very one above here looks like a psychological level. I think it's a monthly support zone, monthly resistance zone rather. Let me check. Yeah, it's a monthly resistance zone. Let's go to the line charts. I know somebody has learned something like that. From the line chart, you can see it. You can see that topic. Okay, this is it right here. Sorry. This is it right here. Support, resistance, support. So, and it bounced off that spot again sometime around March 2022. Yeah, it bounced off that spot. My premium student is $200 now because I don't want crowd in that place anymore. So it's $200. I'm sorry, can't afford it. It's $200. But if you have mind, you can come to my DM. We can discuss though. There's $200. So it bounced off this red line, so shows that it's very important. And the market is actually going for that monthly resistance there that was support before. And if it hits that spot, we are likely to see Euro USD do this. Because yeah, dollar only agree every time. So yeah, that's it. So let's go back to candles. And let's go back to our 4-hour chart. We're on 1-hour chart. 1-hour chart. So let me reset that and come here. Okay. So now we are targeting this place, this very line here. So what we need to start looking for trades that will take us to this line. So this is the 1-hour chart. The 1 hour has broken structure above here. We have taken out the liquidity here and broken this structure above here. And it created an order block around here. This is what I like to see. Now broke this structure above. And then we have something showing on the 1 hour that the market came and respected perfectly right there. If we are watching EURUSD, which I don't watch, it would have been a perfect trade from here. You know, a 20 pip stop loss, and you just leave it to go and target 270 pips above. A very beautiful stuff, yeah? A very beautiful stuff. But since we did not catch it, let's go to the 15 minutes time frame and see. Now, this is a psychological thing I do in charts that I always share. We go down to a smaller time frame now. We are looking for another order block within this smaller one now, right? Because we had liquidity at the bottom here. Very nice trend line liquidity right there, and it has been cleared right there. And this candle that moved right down cleared all this liquidity to come into this demand zone below here. You can see the demand zone right there. You can see that demand zone on the 15 minutes time frame. You can see it. Very sweet demand zone. The market came right into the 50% of that demand zone and moved up immediately and moved up immediately. So right now, the market has created something for us on the 15 minutes time frame, which is this right here. Now, don't always be in a hurry to take a trade. I'll tell you why. The market created a demand zone here, and it took 14th of November, Monday 14th, around 12 p.m., 12:45 p.m., moved, and the next time it came to that same place to pick that order was around 8 p.m. today. That's just like 1 hour plus ago was when it finally picked the order. So don't be in a hurry. The market, if you are sure of your strategy, the market will always come to you, all right? Wait for the market to come to you and you strike. Now the market has created something here. Something has to happen before I can actually take this one seriously. Something has to happen. Something must happen. One of the first things that must happen is structure must break. Because right now, the market has given us this on the 15 minutes time frame. Higher highs, higher lows. Higher highs showing us that it has broken the structure. Higher lows, it did not break below. Higher highs, higher lows. Higher highs, higher lows. You see, it did not break below. Higher highs. Oh boy. Higher highs to the top there. And then we have higher lows that now broke these two structures right there. Moved up, broke below, moved up, broke below to pick this order here. And now moved up a bit, came down a bit, moved up now, came down now. What I am expecting is this. Break this structure like that. And then come back into here. And then actually not really come back into there. Let me show you what I'll be expecting actually. Right like that. Create fresh liquidity right there. Break it up, take the liquidity above, take the liquidity below to pick this. Come here, come here, come here, take out some liquidity if it wants to, and then move. Right? Straight to that red line. Creating some other structures and whatever it wants to create. Like right there. So I want it to break above this point and also break above this mini supply zone above there. Break above it, even if it's by a tiny wick, just break above it. It's showing me that it has changed sentiment from this lower lows, lower high to higher highs, higher lows, higher high. And then I want it to come back into this place now and clear out the liquidity that might be formed, that it might want to form around here. Clear out all this liquidity right there, clear out all this liquidity, clear out that liquidity there. Clear out the liquidity up, clear it down, come into this place, do some magic, and then move. So if I see it on the 15 minutes time frame, there are chances I pick it from here. Now let me delete this guy. Yeah, deleted, right? Deleted. I've deleted the guy. Now let us look for what the 15 minutes time frame, 5 minutes time frame has to say about this move before we end tonight's class. Tonight's class is more than powerful. Now we have this order block from there. Let's see what the 5 minutes time frame is saying about that order block. This is serious. Now I'm seeing this order, this area here, very beautiful area right there. This candle here is giving me what I want to see. This candle right here is giving me what I want to see. Guys, let's monitor this thing. If you're in the inner circle already, you know what I'm looking for already. This is a chalk already, right there. Right there. You can see the chalk. This created a very sweet chalk right there. And it's moved back, created a very sweet break of structure. Yeah. So even if it doesn't break this structure above, guys, risk little but trade it. Risk little but trade it. But if it comes and breaks above this structure fully, then go and sell your father's property and take this trade. Okay. If it was expecting something like this, just give us a little bit of double bottom, take above, move into this place, and just buy immediately. So this is what I'll be expecting you guys to do. Now, I did this little analysis to show you guys how my psychology is when I'm trading, what I look for in the market, and how I look at it. I for up to about 7 different confirmations, which I'm not sharing completely here right now. But these are basic things that I have shared right now. And with these basic things, you can catch some very good trades. If it goes against me, I don't really care because I'm following my risk management. My father is not the owner of the market. I take my trades from the top most of the time. My father is not the owner of the market and I stop at the bottom. If I feel like I don't want the market to take me out, I reduce my lot size and increase my stop loss, and then we target where I want to target. I might increase my stop loss because I want to hold this, I want to hold this trade for like 200 pips. At least 250 pips. That's I'm seeing 245 pips there. 245 pips. So I might be risking 50 pips for that. So I'll do 1:5. Now risk 50 pips. If I use one lot size, I'll be risking $50 to make $245, which is a very good thing. All right. So this is a trade I'm looking at from now to tomorrow. If it goes against us, there is no and this person knows sabi trade. No. Or maybe you lose a trade, you're not feeling like you are bad. You are not a terrible trader. You followed your rules. The market is not your father's property, and the market has given what to give you. Follow your rules again for the next trade. Don't be looking for another strategy. Follow your rules again, except of course you don't have rules. So thank you guys for attending tonight. We have less than 1 minute to soon end. I'll see you in the group chat. Ask your questions there, and I'll see you in the next class. Cheers.